All right, traders, it is the 23rd of June, 2017. My name is Jameson. Welcome to Behringer Trading. We are looking at a daily vertical bar chart of the ES&P Mini futures here. So there's a couple of things. One is I want you to appreciate the bullish ascending channel. Make it very clear that this is a bullish trend and there's nothing present that says the trend is not intact at the present time. I want you to appreciate that prices became a little overbought within this smaller bullish ascending channel. In other words, this is the mean of the actual trend. We're going to now identify that as being overbought. We can appreciate that we're trading laterally here. We're working off these overbought conditions through this lateral trading activity that's present. We can appreciate there's not a ton of volume. But if we look at the next level down here, this is actually the delta. This is the difference between the bids and the asks. And it looks like, despite prices staying lateral, or trading within a lateral range, or within this trading range is present, that there's a buying imbalance that's present. In the presence of this observation, I would suggest that this might be bullish accumulation, which resulted in prices rallying higher. And now we've pulled back and we're testing this prior level of resistance here, and we're back testing it and confirming it as support. I'll also point out that as we pull back here and potentially confirming this level of resistance as support, there's narrowing price spreads. The narrowing price spreads in the pullback suggest that supply is having a difficult time overcoming demand. Additionally, we're pulling into the lower trend line here. We can anticipate that we're going to start to see some support. If we look at not only the character of the pullback, the narrowing price spreads that are present, we can appreciate the delta. In the delta, there is a selling imbalance, but it's contracting and it's very weak. If we look at the cumulative delta, we can appreciate that within this trading range, that it looks like there is a cumulative buying imbalance that's present. I'm biased that in this trading range that we're seeing some reaccumulation, some bullish absorption. I think the problem exists at that there's not a lot of demand at highs. So they create some fear. They pull and they shake the weak hands essentially, and when the bears or weak hands release their supply, they're down here and they're ready to buy it. They're creating liquidity, and while they're doing that, they're absorbing the supply. They're going to control the overhead float, and I speculate that will rally into the upper trend line. At the present time, which we'll review, this is consolidation would only support a price move into about 247, 248. So we're still looking at a daily chart. This is a candlestick chart. My magic red line is nothing but the Keltner channels, and I've removed the upper and lower boundaries. So this is just the mean. You can identify that prices respond pretty well to the mean of the Keltner channel that's there. But what I want to show you is the cumulative delta. And we can appreciate that in this trading range here, it looks like there's still a buying imbalance that's present. Alright, so now we're looking at a daily footprint chart. And the highlighted areas here are buying and selling imbalances. So we have the bid and the asks. The bids are on the left side, the asks are on the right side, right? So when a buyer comes up and a buyer hits the asks, we come up and we actually fill up here. When a seller comes down and hits the bid, it fills on the left-hand side. So sellers come down and hit the bids, buyers go up and they hit the asks. So we can appreciate that. Again, this is a daily chart. On the last 3 daily sessions, we have a large buying imbalance that's here. Now, the market's nothing but an auction process. So you can appreciate the structure that's present up here between the bids and the asks. Specifically up here, you can appreciate there's still, they hit this, 13,823 buyers came up and hit the asks. You can appreciate the second time up here, there's only 736. There's no demand. And then we pull back. So what I want to show you is that, or what I want to convey, is that if you're bearish and you think the markets are going to break down, the markets are not going to break down until the bears or those that are controlling the market get the best deal for their shorts essentially, or they sell at the highest price. And as long as there's demand at highs, they will continue to test highs until there's no more buyers. I look at this, I still see buyers. And as I scan this, I can appreciate here, right, bid and asks, that no more sellers actually came down and filled this here. So there was actually, we ran out of sellers. So during the last 3 sessions, I see a nice strong base that's building. We have the resistance defined here by the selling imbalance, but it looks like the auction on lows has dried up. I anticipate a retest of highs. I believe that we're actually confirming this prior level of resistance. We're confirming it as support. And here's something that's objective to confirm at the present time there's an attempt to make it a support. So the daily vertical bar chart of SPY actually just makes it a little bit more transparent and easier to understand. This is distributive. We have a preliminary supply, buying climax, automatic reaction, secondary tests. We wash out lows. This is almost a sign of weakness, but the failure to follow through and the rally back within the range, I've ignored it. And then we just identified this as an up thrust, and then the breakdown with the low closes are sign of weakness. Prices rally higher, they fail, we kind of have this up thrusts, and then this is a clear up thrust after distribution. We trade higher within this range here, all-time highs, there's no demand, and then we break down. And there's a huge introduction of supply, very distributive. Given the bearishness of this vertical session, the amount of supply that's present, and it did not result, supply did not overcome demand and wash out lows, that is a sign of bullish accumulation. I've labeled that as a change in character. That is bullish absorption. That is one of the main things that I look for, and I try to set you guys up for trades, are these hidden little big efforts, little rewards that are present. They're very rewarding. And you can appreciate in retrospect that this observation is correct because prices, abruptly rallied and made new highs. We rallied through this area, we back tested it, we confirmed it as support, we rallied again. And now look, we're taking these highs here, we're confirming this prior resistance as support. We break a new high, and additionally, we're just stair-stepping, we're confirming this level of resistance as support. You can appreciate that we rally higher, we reverse, there's no more buyers. This is a bearish up thrust. I don't deny that. But the character at which prices are pulling back on narrow price spreads and we're maintaining 50% of this actual rally higher, that's a bullish observation. I will say that this vertical bar here, or the amount of volume that goes into this effort with the narrowing price spread, is actually a little distributive. Nonetheless, we're above this area and you have to respect the actual price close, and this looks bullish. The amount of time spent in consolidation, this is a 1-box reversal, 1-box size. If we count these boxes, 1, 2, 3, 4, 5, there's at least a $5 move up and down. Given that I'm bullish because I don't see a lot of supply presently, I think that this is going to be a 147 target. We can additionally go 1, 2, 3, 4, 5, 6. So there's 6, and that would give us a 249 target. So the present time you have a $5 to $6 move up if we break out of the range, $5 to $6 down if we break lower.